Hello, and thanks for checking out this video about OptionVue's new earnings play module. It's pretty exciting. I've been trading the system along with some other people in the office here. It's a lot of fun. Had some really great trades and some great experiences. So I'm happy to share it with you. There are 5 different kind of earnings searches that Lemonades has built into OptionVue, literally providing hundreds of trades to consider over the course of a year. Every 4 times a year we have earnings season come out, and it really seems like they don't stop now. They kind of almost you only have maybe a couple weeks of a lull when things kind of slow down, and then the next earnings season kind of pops up again. So it really keeps things exciting, and a lot of great trades to put on here. I'm going to go ahead and share my OptionVue desktop with you now. And what you're going to see, because of the nature of the product, I really kind of only put a couple candidates up, maybe even one in some cases, just so as not to give away the secret sauce, so to speak. So we'll go ahead and let me share my desktop with you now, and you're going to see my my OptionVue here. Actually, I'm set here on my VXX tool. This is another trading system in OptionVue. And if you go to OptionVue.com and click on our trading tab, you can learn about this system. But what I'm going to do first is kind of show you, if you go to view at the top of your OptionVue program, and you'll see these new buttons here, import earnings plays, okay? And what you would do is you would click on this button, and you would do this every Monday. And the reason is the algorithm goes out over the weekend and collects new candidates for us to look for. These are the categories you have. You basically open this up on Monday, and you'd actually get notified on a Monday morning from OptionVue saying, hey, there's new, the search was run over the weekend. Do you want to import new candidates? And you could say yes, and it'd pull you into open this window for you here, and you could select which ones you want to have pulled in. I have all of them pulled in. The first category we have is called prime movers. Then we have non-prime movers. We've got earnings pairs. We've got echoes, and we've got runners. Glenn put kind of a little nickname for these here. These quality ratings I put in here are really toned down. As you, we recommend, if you're getting started with this, the default settings I believe are quite higher, but I kind of like to tone mine down. I've had a lot of experience trading this, so I like to pull in, even some low quality rating ones, just to see the opportunity that might arise from it. I don't mind, deleting some of the candidates that come in, but at least I can say, hey, that might be something I want to look at. I can pull up a price chart, do a little bit of my own analysis, read some news articles on a company or something like that. And then, decide if it's something I want to watch or consider putting a trade on. Over here are some other qualifiers. Minimum DBO, that means at least $100,000 worth of options are trading on this daily. You can up this, of course. Some experience I've had is coming in. This is even kind of low, this number, perhaps, but I've put that number a little lower into the 90, 80, 60 range. And I've gotten into some interesting situations because, if something's not liquid, sure, the market maker is going to let you get in it, but getting out is another issue altogether. That's just something I'd like you to be cautious of when you're trading this or putting these kind of things in here, and on any earnings play, of course. Minimum stock price. Usually we have that set higher. Again, I put this in lower just to pull in some other candidates to see what's going to come up. Usually around $20, maybe higher, is a good number that we would recommend starting off with, or consider putting those kind of trades on. The reason being is that, when you are using a lower stock price, and some of the results come up saying, oh, you have this stock is on a runner, is possibly going to move 6%. Well, if it moves 6% and it's a $12 stock, you know, um, not really moving that much, versus where if you have a $100 stock and it moves 6%, you're moving $6. You're definitely going to be moving, in the options chain to another strike or two throughout the day, which is what we're looking to do. Whereas if you're looking at a lower price stock, a lot of times you'll see, the only contracts available are maybe a $5, a $7.50, and a $10. And it's really not going to make that huge of a difference if the stock moves 6%. So just another kind of precautionary tale that I've learned and picked up doing this. Number of successes here. This is what Len has done is program the algorithms to look back 2 years. So a total of 8 earnings seasons or earnings plays. And what he's done is he's actually used OptionVue's data, historical data that we have, and he's put on a straddle or a calendar, or he's put on the specified trade and back tested it. The algorithm goes back and sees how it would have done the next day. So this is saying that it has, over the past 8, if 8 are available, it might not be so because maybe the stock hasn't been around 2 years yet. But over the last 8 earnings seasons, you'll see this. It's only pulling in candidates where this has worked 2 out of the last 8 times, or 4 out of the last 8 times, or 5 out of the last 8 times. Okay, so these are features you can come in here, and it's really easy to clear out the results that came in, switch up the quality ratings and maybe some of the other qualifiers, and see what kind of different results come in. Okay, so this is what you would do. You would hit go, and then literally it would create, if you don't have them already, you only have to do this once. It'll create these 4 tabs down at the bottom. I'm going to close this now. Once you hit that button for the first time, it's going to create E primes, E over, E pairs, and runners. And what it does is you can hover over these tabs, and it tells you exactly what you're looking at here. Okay, the prime movers are the stocks that are going to make big moves. And it'll say you're going to buy a straddle prior to the announcement day. It's going to announce the next day before the market opens or after the market closes. I'm going to click on E primes here, and the quality indicator. Okay, so we're going to go up here now, and I've only got 2 here. These happened. Arun, I actually played Aruba Networks the other day, and then you have GE. This is an older one. Let me blow this up here so you can see more. Okay, this is the earnings date. Okay, so the 26th, this is earlier this week. Today's 28th, and they announced after the market closed. So you would put on a straddle, okay, on the 25th. Usually towards the close, and it says that here: buy a straddle or a strangle. Straddle or strangle depends on where the stock is sitting. A strangle if you want to really try to center it if it's not possible to get real close, or if the stock's not trading close to an at-the-money strike. And then you would put this on, close the position anytime the following day, but historically it has been best to close the position soon after the open. I can tell you for a fact that on this Arun, I wish I would have sold it within the first hour that the market opened, because Arun actually pulled back most of the day, or the whole day. It popped up like 8, almost 9%, I think, and then pulled back all the way down to, it got as low as like 3.5% or something like that. So these are some things that you're going to have to develop in your own strategies with this one. I think this one, if you would have gotten out within the first hour, you would have probably made, I want to say it was in the 40% range. Okay. And what this is saying, this is really relatively a low quality rating one. Okay. It has, and this tells you when to get out. And I didn't heed this, I should have, but it said the O means when you're going to get out. Okay. As O stands for open, C stands for close. Okay, so based on the algorithm that he runs, he said the best time after the back-tested algorithm results say get out at the open after the earnings are announced. This one down here, GE, says get out at the close the next day. Okay. This means that on average, 4 out of the last times have been winners. Okay, 4 out of the last earnings announcements. This one is for GE is 5 out of the last earnings announcements. It has returned on average 20%. This one has on average returned 23%. Now I put some really low ones in here. Again, the secret sauce thing, don't want to give it away, but we've got 80s, 90s, 150s, and everything in between. And when you saw that quality rating here, you'll see this is the quality rating. So my prime movers, I say I want to see anything that brings in an average of 20% or higher. Usually, and we've messed around with this too, you'll say I don't want to do anything unless it's got an 80% return possibility or higher, or 60 or 40. You can put anything you want in. I put this in so that everything higher, 20% or higher, comes in, so I can look at it. Okay. And like I said, this one would have had a higher return had I gotten out at the beginning. I pretty much get out at broke even for this one because I held it through the day, not through the day, but when I started seeing it turn back around, I got out. And that's the thing. If these things don't work out, they're going to move, but the chances are, you know, if they don't move completely to where you need to get to that profit zone, definitely best get out. Wait for the next one. You know, holding on to these earnings things when they don't make the immediate move or jump right away, it's kind of best to cut and run and move on to the next one. That's what I found at least, and it's kind of difficult to do at times. I still struggle with it, discipline, but some great opportunities. So this is the prime movers. Like I said, you're going to get probably throughout an earnings season anywhere from 60 to 90 trades, depending on your quality setting, possibly even higher, 4 times a year. So every earnings season, you're going to see this. And once you do this, I mean, it's going to populate like crazy. And during an earnings season, we also keep the old ones in for that entire earnings season. So you can go back and test those results if you want to, or go back and see how they would have done. Okay, so this is, you know, when they're announcing earning notes, this is for the prime movers. So this is the expected return, 23%. It's done this, it's been a winner 4 out of the last 8 times. This one's 5 out of the last 8 times. Get out at the open, get out at the close. Okay, now and when you have a ton of results in here like you would simply come in here and right click underneath this where it says earns date in this little gray area, and it'll put them in chronological order, like when the next trade to consider is going to be. And then it'll put all the ones that have passed beneath that area. Okay. So that's the prime movers. Let's move over to E-overs. Okay, these are prime non-movers. These are stocks that are expected to stay within the range of what the market is, what the options are pricing in. So basically, you put a straddle on these, you're expecting, you know, after the ball crush, even with the ball crush, with the prime movers, that it's going to move outside of the straddle, of course. Opposite is true with the non-movers, the non-prime movers here. Okay, so these are for calendars or for naked straddles. Naked straddles take a lot more capital to put on. You can come into this view at the top, and we're going to go back to this import. And you can see for the non-movers, you can say the intention is, do you want to buy calendars or do you want to buy naked straddles? Okay. So these are some good ones. There's actually one coming up today I think I'm going to try out. So basically what it is even after the ball crush, you know, wherever it's going to stay within that range. So these are non-movers. These are things that after earnings, they move a very little bit or not at all. So you're going to be able to capture all of that premium volatility, crushes out of it, and be able to work with it that way. These, you don't have a ton of these. You have a decent amount, but not like any of the other categories. Um, but again, here is one. This is one that's going to be after the market closed today. This is the one I was talking about that I wanted to try playing. Expected return is 29%. Okay, because it looks like this stock, and I'm going to go and highlight this here and pull up a price chart. And of course, that's why it says only 3 out of 3, because it has not been around long enough to have more candidates here. I can come over here and I can click on this little E button, okay, and it shows me that these are the past earnings that came in, okay. So basically, what the algorithm is saying is that if you put this a calendar on, at the money calendar, that it stayed within this range, you were able to capture the volatility question, be successful on these trades. Okay, so 3 out of 3 times this worked. Some people might say, oh, this stock hasn't been around long enough, and that's entirely up to you whether you want to try that or not. Okay, talking to some of the customers that are trading this, they're saying, I only do things that I've done 4 out of 8 times or better. So it's again, which ones you decide to put on and do. You can base those on your own quality parameters. Okay. This is another non-prime mover. This is specifically for calendars. Okay. And then this one, Zillow here, 6 out of the last 8 times, and it's a 14%, what you expected to gain here. Okay, risk versus reward on something like this, maybe not that great. But again, something you could then go into OptionVue, put a calendar on, see what it looks like, see what the break-evens are, look at a chart, see where support and resistance is. If this does decide to gap, where it's going to go, and you can, then say, okay, I'm risking this to make that in OptionVue. So, OptionVue, and then the charts, and then these kind of historical figures will really paint a good picture of what the risk looks like for putting on one of these trades. So this is the prime non-movers. I have not done one of these yet. They are just a lot of the candidates have not come in that much this season since I've been trading it. The pairs is the next one we're going to talk about. This is one of my favorites. This is a strategy that involves 2 stocks. The primary stock is really linked up, or in the same industry, or they really one stock. A good example is MasterCard and Visa. Another one is like maybe you'll have some gaming companies, video gaming companies, electronic companies, things that are in the same industry that are really tightly connected in their industries. So if Visa moves up, you usually see MasterCard move a little bit with it in the same direction. American Express or Discover, those are like the credit card companies, basically, is what I'm using as an example here. So what you'll do is Visa has announced earnings coming up tomorrow. You'll actually put a straddle on MasterCard. Okay. Now there's no volatility crush coming out of MasterCard. So if Visa has a huge move up, you're immediately going to make money if MasterCard follows, because there's no volatility crush. There's no huge range that it has to get to before you start moving past your break evens. So these are some good ones. I'm still on the yield, so I'm going to click on the pairs here. So this one I just pulled up. I didn't do this one like that. Like I said, when I did these, I really toned down the quality levels and then deleted out all the candidates that were populated here. I mean, you have a full screen here of these candidates. So this has succeeded 4 out of the past 7 times. It's a quality of 27, which means you, on average, would make a 27% return doing this. Okay, it tells you how many DVO. This is in terms of thousands as well. So you would buy a straddle on this one, close it anytime the following day. Okay, and then he's saying take this to the close in this algorithm. Okay, so these are one of my favorites. The reason is because it's not really a volatility crush or volatility play you're doing here. You're taking advantage of the other stocks movement, and this one is going to follow. Okay, I love putting these on low risk. If it doesn't work out, the other stock doesn't move. You're basically getting out for 1 day of theta and commissions. Okay, so earnings pairs, love that one. Echoes is the next one. This is a little bit trickier of a strategy, but it will tell you, whether there was a trade here or not. Okay, sometimes you'll have candidates that come up here and it'll say, okay, this one is going to announce on this date, and if it jumps more than 3%, and you want to basically put a directional trade on when the earnings come out for this one. So basically what it's saying is this Symantec, if it jumped 10% after earnings, what you would do is come over to Costco, wait for their earnings to come out, and then you would put a completely bullish trade on, expecting Costco's earnings to go in the same direction. Okay. This one you definitely want to take a look at, really dive in, look at the companies, look at their histories. This has succeeded 2 out of the last 2 times. Let me just look at a price chart here. Okay. And you could expect a 42% return on average out of these last 2 times, past 2 successes. Okay. Len has been playing these a lot lately. I might have played a couple of them, did okay, not spectacular. I think it might, have, of course, has something to do with, the type of market we're in and things like that. So you'll get a ton of these candidates as well. And echoes, I don't like the echoes so much. I don't think I've seen enough success with them yet to really trade these a ton. MasterCard and Visa, of course, I will play. When you have the quality ratings here, like the MasterCard Visa quality ratings, like 150-some%, it's crazy. You'll get some that are really high, and that's what I would do with these ones. Is if you're going to do something like this, I would kind of do only the really high quality ratings. Okay. Runners are by far my favorite. We're going to talk about those next. This is where, on average, this is different as far as not telling you what the percentage return is. This is telling you that after it announces, it's going to move wherever, if it gaps up, it's going to move 3.4% in that direction more. So after it opens, earnings comes out, it gaps up, it gaps down, it's going to move in that direction 3.4% more. I can tell you personally, about 3 weeks ago, a month ago, I did one on a Monday morning, and I made 150%, and then on Thursday the same week, I did another one, or Wednesday, and made over 250% on doing these trades. And that's just 2 trades 1 week. There were only runners that week. Love the runners. They're awesome. And the thing is, so you're not taking advantage of the vol crush. You're basically getting in after the open, saying, okay, this thing runs. And he's gone back and tested and says, on average, these things run or keep going in that same direction they open and after earnings. You'll get some results that say, this thing runs 10%, 12% more. Some of them, 4, 5, 6. And again, this is kind of coming back to where I was talking about that a $12 stock running 5% is not as big as a $100 stock running 5% or a $50 stock running 5%. So those are things you're going to consider when putting these on, and of course liquidity as well. But basically, you buy a call or buy a put, wherever you want to do that. Usually, what I'll do is the night before this is happening, I'll go into OptionVue and I'll take a look at some of the options out there. I'm kind of estimating what I'm going to pay, where the volatility is going to be, where the prices of these things are going to be the next day after the vol crush, and then have a game plan going into the next morning. Because usually, and we're still talking about it, when the best time is, because sometimes these things will open up big, and then they'll pull back. So we're kind of still working on. I like to get in right away. Len thinks you should wait a while that day. That when I say wait a while, you're talking 15, half an hour, 45 minutes before you get in and go with the direction. I like to get in, pretty quick. I'm usually in within the next first 5-10 minutes. Usually, if I'm doing this. Now, you can really see what's happening because if they have an announcement after the market closes, you'll be able to see in after-market hours, what the analysts and what everybody's really thinking about it. If it's up 3%, 4% in after hours, it's going to already know it's going to go that direction. Now, the other tricky part is sometimes you'll have BMOs, which is before the market open. Those are tricky. You're going to want to wait a little longer with those usually, unless there's a clear indication that the thing is going to really pop in one direction or the other. Because sometimes, before the market opens, the announcement about the market open, and analysts are still diving in and trying to decipher, all the figures and numbers that came out. So sometimes you'll see seesaw back and forth a little bit, or a lot, and before there's a clear direction where the underline's going. So that's just another cautionary remark I wanted to make about the BMO before the market opens announcements. So again, runners, these are my favorites by far. I get really excited about these. The other thing, one more thing I wanted to touch on is, and then I'll take you over to the website and show you how you can get more information about this, is if you go to view at the top and then you go to weekly planner, okay? The weekly planner is going to pull up a nice calendar, color-coded, with each day's trade, when to get in, when to get out, close this trade, here's a prime mover. Really, I didn't prepare one, so I don't have one to show you now. But basically what I'll do is on Monday morning I'll run download my daily files and get my candidates and run them in, and then, kind of weed through some of them, kind of tweak my my quality ratings, see what I want to do. And then I can print out my calendar. It's really nice and structured for you so that you're not going to, you don't have to come in here and squint and try to see what the next date is or what's coming up. You'll have the calendar that you can print out if you want to, or just have in a Word document or whatever, and reference whenever you want to as well. So that's really kind of cool. There's some really cool new features coming out in OptionVue to help along with this as well. And our graphic analysis screen is going to show you like break evens, is showing you where the market, based on the option pricing. There's going to be little tabs at the bottom of the graphic analysis showing you where the market, where the options market is pricing the move. Pretty neat. I think he's also going to have some other kind of intrinsic, extrinsic value indicators in the graphic analysis, which would really help with earnings play, so you can kind of see what you're going to get, what kind of a price you're getting for getting in and getting out of these things. Pretty excited about that as well. Any edge we can get is welcome, but this is definitely by far pretty amazing as far as what OptionVue has come out with. Like I said, just that 1 week I had those trades. And you're going to have, and the thing is too, I mean, you want to maximize your wins and minimize your losses. Again, if it doesn't go in your favor, these, it's going to be one of those, like for instance, 5 out of 8 times winners. It's one of those, those 3 times that didn't work out, get out, move on to the next one, minimize the losses and work towards the winning trades. And there are a lot of winners here. It's pretty awesome. I am going to now show you where you can find out more information about this. Go to OptionVue.com. As you can see, we've got the new product launch here. Okay, this will probably be up here for a while. You can also always come to trading. You can see about our VXX trading system here, but you can come into here, and this is where you'll see Len's video about the that he did about the earnings module. He goes into a lot more depth and stuff like that. I kind of want to do a shorter one here just to get you guys up and running. It's on sale right now for $2,000. You get that for the year. It's going to go up to $2,400. This is September 1st, only a couple days away, but I recommend jumping on this. It's pretty amazing stuff and really exciting. So any questions? don't hesitate to give us a call here, 800-733-6610. You can always email me, james@optionvue.com. It's been a pleasure here talking to you guys about this. And personally, I've been trading it. I've been having a lot of fun with it. And if you're interested, give us a call. I know we're going to be getting calls during earnings seasons, and we'd like to talk about it. We're all traders here in the office. Most of us are, at least, and doing this. And happy to look at a couple of them with you and help you model it in OptionVue. OptionVue's horizontal skew modeling, really allows you to model the volatility pressure and what it's going to look like the day after the announcement if you put a trade on. So again, thanks everybody, and best luck trading.